Hello everybody, welcome back to my channel, Trading Secrets. This channel is for entertainment purposes only. For those of you who do not know, my name is Ali. I have over 20 years experience teaching accounting, economics, business and law. And through this channel I'll be providing some stock analysis and also an update on our $1 Million Challenge, so please stay tuned. In the previous video we did a stock update on ticker symbol MMAT, Metamaterials, and also an update on ticker symbol MMTLP, the special dividend, looking at 5 questions to ask for George, so please refer back to the previous video before we start today's stock analysis. Quick reminder of the $1 Million Challenge. So if anybody's not aware of this, this is a journey of an investment of $1,000 to a return of $1 million over a period of 3 years using compound return investing. So the strategy involves trying to get 201 trades using an average return of 3.5% per trade, and it's not 201 consecutive trades, and we do take into account losses. So once you join the challenge, you'll get access to a special exclusive in-depth strategy video. This video will give a lot more details in terms of how to start and continue with the challenge. You'll also be part of the Discord community, which is currently well in excess of 300, sharing due diligence, trading tips, technical analysis, buy alerts, etc. And in the Discord area, you'll have an opportunity to ask questions, chat. The stock spreadsheet is in there, and we also have the leaderboard with updates. As part of the challenge, you'll get access to the spreadsheet, which has low and medium risk stocks, many of them updated weekly, and also color coordinated using Google Finance Formula. So it's always live and with option of using research on there with links as well. And finally, we have a leaderboard to celebrate success, so you'll be able to view the progress of many of the members taking part in the challenge, and you'll be able to see that so far it's continuing very, very successfully. So join us on this journey. Thank you very much for listening to this, and details in description below. In today's video, we're going to be looking at 3 stocks in the field of AI, artificial intelligence, to hold for the future with great potential. Before we do that, quick update on ticker symbol NLST Netlist. This is a stock that has been featured a few times on the channel, and there was some breaking news today. And we're going to share the information here from the investor relation page. We can see the key headline here is Netlist provides update on action in federal court against Samsung. So let's have a quick look at the summary on this case. What that we can see on this announcement, we can see here the jury trial in the Federal District Court of the Central District of California has concluded, with the jury declining to award direct damages of $2.5 million, which was the amount sought by Netlist. So on the face of it, that doesn't sound like great news, but let's have a look at what else we can see in this judgment. So the key thing to remember here is overall in terms of the judgment, we can see that in October 2021, the court did issue a summary judgment in favour of Netlist. So overall the victory is still with Netlist, and this was against Samsung for material breach of various obligations under the Joint Development and License Agreement, JDLA, which the parties executed in November 2015. So we're going back in excess of 6 years there. So the summary judgment order, the court also held that Netlist properly terminated the JDLA, a remedy which leaves Samsung without a license to Netlist patents. So the ruling, however, limited the damages phase of the case to issue of direct damages. The case now moves to post-trial phase over the next few months. So there is a statement here and from Netlist, and the statement is: we're disappointed with the jury's decision on the narrow issue. And however, overall, we're very pleased with the overall outcome of the case because it confirms that Samsung no longer has a valid license to Netlist patents and therefore requires a licensing agreement. So that's the finer details. Let's have a look at what else we can comment with regard to this case. So just to get a wider perspective on this, the key thing I'd like to emphasize is, although the outcome is a little bit disappointing, the key thing to remember and emphasize on is that there is confirmation that Samsung does not have a valid license to Netlist patents, and if they wish to use these patents going forward in the future, they will require a licensing agreement from Netlist. The other thing I'd like to remind everybody in terms of going forward, although the Samsung case was important, what is much more important is the case with Google. So we know about this case with Google. This has been covered in a previous video. However, I'd like to just Remind everybody in terms of a key date for your diary, that is January the 12th. This is for claim 16. So that is where we are with regard to a potential outcome or a potential decision. However, with regard to such court cases, one thing I think you need to bear in mind is, although we have a date of January the 12th, it is certainly possible to have an out-of-court settlement before then. So in order to benefit from any potential spike in the share price, you would need to be in it before that date. So let's now proceed to have a look at the chart. So I'm going to start by having a look at the 1 month chart for Netlist. So if we have a look at the key date here, around about the 8th of November, the stock was trading around about $7.89. There was a sharp decline then when it came to below $7. Then from the 9th of November, it did trend upwards, reaching a peak around about the 19th of November of approximately $7.50. So since then, we have seen general momentum going downwards, and then on the 3rd of December, sharp decline where it went just below $5 for a short period of time. And right now, at time of editing, we can see it was trading just in excess of 1% up on the day at $5.70. What I'd now like to do is move on to look at the 3 stocks in the field of AI. We're going to start with, first of all, ticker symbol PATH, and this is also known as UiPath. So let's start by having a look at a quick profile of this company for anybody who's not aware. On the screen here, you'll be able to see that in terms of this company specializes in robotic processes of RPA, and this is actually a clever field in AI using machine learning and AI to create bots. It also has automated software units that can handle the ordinary, boring and repetitive tasks of the digital world, or as the company puts it, the robots, so that people do not have to be the robots. Let's have a look at the history of the company now. So we know that this company was actually established and it has been in operation since 2005. However, in terms of IPO, it's only IPO'd this year. So obviously right now in terms of the market, we know there's a lot of volatility. So the stock started trading on April 2021. The company had 30 million shares. We're looking at another 14.4 million shares were added on afterwards. We can also see that the initial price was set at $56, which was quite high. And the $43 target price at the time was between $43 and $50. So the company realized $728 million of the total $1.34 billion which was raised. The company did not profit from this sale, so that was not a good thing. However, since then, the shares we know have generally trended down. So my opinion there is, in terms of the valuation was probably a little bit too high. And the next thing I'd like to focus on is the reporting of the quarterly results. These are going to be due fairly imminently on December the 8th. So this is going to give us a good little bit of an insight in terms of the company, and it will give us an idea of where it stands. So although we know that the valuation was too high, the reason why this stock could be certainly interesting now, because it could right now give us a good opportunity to enter this at a much better price. So let's have a look at the previous revenue. So previously the company reported revenue of just in excess of $195 million, which was up 4.8%, and also sequentially 40% up year on year. So in terms of the recurring revenue, this is showing a rise to $726 million, and that's also a gain of 60%. So the company did finish strongly in the second quarter with $1.9 billion in liquid assets, so that puts the company in a very strong position. Let's now proceed to have a look at the chart for today, and we can see the stock is up today, just in excess of 5% at time of editing, at $47.50. But what I think is more interesting is the analyst rating. So let's have a look at the analyst rating for ticker symbol PATH, and on the screen here you'll be able to see we have a significant amount of analysts looking at this stock, and we're looking at 16 analysts. So from the 16 analysts, only one of them have rated this as a sell, 7 have rated it as a buy, and 8 have rated it as a hold. So in terms of the target price, on a high, we have a target price of this approximately $85, which would represent close to 100% upside potential. However, based on an average, we're looking at a target price here for 1 year of just below $70. So that is still giving us a very healthy upside of just in excess of 46.51%. The next stock in the field of AI I'd like to look at is ticker symbol STEM. So if we have a look at the screen here, we're going to have a quick look at the profile for anybody who's not aware of this stock. So this is a stock that uses AI technology to drive clean energy monitoring and storage systems. So basically what the company has put together is software to solve problems of energy storage batteries, and it's also looking at maximizing renewable energy for a cleaner, more resilient energy grid. So certainly great idea there. So the dream of green energy boosters and stems from the AI point of view is at the heart of its system. So in terms of the company's Athena software platform to enable utility bill savings of 10 to 30% is certainly very positive from the customer point of view, and this system is capable of machine learning. It can learn when and how to switch from grid power to on-site generation for battery power for maximum efficiency, energy savings and cost savings. And again, I think what's also interesting with regard to this company, it is a pure play smart energy storage company, and it's also the first of its kind to go public. So it entered the markets through a SPAC transaction again around about April 2021 with Starpeak Energy Transition Corporation, and this was approved on April the 27th, and it's debuted as ticker symbol STEM. So Starpeak bought around about $383 million in cash, giving in terms of a combination, as well as that $225 million of PIPE funding, 608 giving a total of $608 million in terms of overall capital for the company. So the company has got a market cap right now at time of editing approximately $2.57 billion. However, I think what's interesting from right now in potential investors' point of view, the stock has gone down approximately 34% since April. So again, similar to the previous stock, potentially this was overvalued, but now could give us a good buying opportunity. Let's now have a quick look at the company's financials. So although I've just stated that the stock has been trending downwards, what's interesting here in terms of the business, that has been trending upwards. So what is staggering here in terms of the third quarter of 2021, the company has reached $39.8 million in revenue, and that is up in excess of 334%. So that's phenomenal compared to the previous quarter in the previous year. So the company's net income is now turned positive. So what that basically means, previously it was making a loss. It's now we're looking at previous loss of 18.8 million, and now the company has made a profit of just in excess of $115 million in the third quarter of 2021. So that's an amazing turnaround. In terms of one of the key analysts, he said in terms of the company, we're looking at the company is making an 80% plus margin on revenue. So that's a very, very healthy figure there. And the company is also going to benefit from the scarcity value of one of two pure play battery cos. So great potential going forward for this company from a revenue point of view and a profit point of view. Let's now have a quick look at the chart. So at time of editing, we can see the stock is up just in excess of 4%, closing at $19.46. And let's now have a look at the analyst rating. So again, the two analysts have looked at this, and both of the analysts have indicated that this stock is a buy. However, what is very interesting is that they have a target price of this of $40.50. So on a high it's $46, on a low it's $35. So what's interesting about this is that this is representing an upside potential of just in excess of 108%. And the last company I'd like to look at is ticker symbol AI, also known as C3 AI. So this is a company in the enterprise sector of artificial intelligence. So let's have a quick look at the profile here. So the customers have artificial intelligence software designed to improve the efficiency and user experience of enterprise scaled applications. So the system allows customers to streamline their app development and customize their end use apps. The applications look at fraud detection, supply chain optimization, customer engagement, and also other critical processes. So again, in terms of the company, it's relatively new to the market and also entered the stock exchange in December 2020. So in terms of the initial offering, this was a very low float, approximately 15.5 million shares, and the company raised about $651 million in gross capital. So the stock has had a hard time since then, similar to the other two. It is down quite significantly, approximately 78%, due to a number of reasons, but I think the key reason is going to be overvaluation. So let's have a look at some of the factors involved in affecting the company. So first of all, we know the pandemic put a big constraint and strain on many businesses. So AI was not immune to this, so that has had a critical effect on that. We've also got other issues as well, and in terms of what's happening right now, the company are going through a reorganization of the sales team. So the company are trying their best to change things around. In terms of contractually obligated business, this has not yet been delivered or paid for, so it's not on the books in terms of revenue, but they are looking at generating contracts. But in terms of the potential going forward, we're looking at a potential increase here of 74% increase on the previous year for revenue, which is very, very good. Let's have a closer look at the financials now. In terms of the bulk revenue, this is coming from one large customer, which is called Baker Hughes Company, and the good news from the stock point of view is that the contract they have with this company has now been extended from 5 years to 6 years. So this has increased the dollar value from $45 million to a staggering $495 million. So that is certainly good. However, it's not great to have one significant large customer and relying on that customer, so that's on the negative side. However, on the positive side, revenues are going to be up solid, 41% year on year. Subscription revenue, which makes up the lion's share for the company, has gone up 32% year on year, now reaching $47.4 million for the year. And we're also looking at better than expected results of $57 million a year. So potential for the future of this company is certainly starting to look very bright. Let's now finish off by having a look at the chart. So we can see here on the chart at time of editing, the stock is up again, very healthy, 6.67% at $32.31. And let's finish off now by having a look at the analyst rating, which I think is quite interesting. We have 8 analysts who have looked at this stock. 4 have rated it as a buy, 2 have rated it as a hold, and 2 have rated it as a sell, probably due to the trend of the chart. But let's have a look at the price target. We can see it has a price target here on average of $55.13. But what I think is very interesting is that one analyst has rated this as a price target on a high of $103. So that is staggering in terms of potential going forward from an upside on a high, could be well in excess of 100%. So based on the average price target of $55.13, we're still looking at a very healthy upside of 69.27%. Finally, if anybody would like to get advance notification of such stocks and also join us on the challenge, details are in the description below. Thank you very much for watching. Please stay tuned.